there, welcome to another edition of Home Advantage. Kelly Warren on this side, Rick Palmer on the other side, talking about Valley Mortgage Solutions. And we already know why you got the company started and things like that. So I thought we'd talk about loans themselves, different kinds of loans. Rick, why don't you start with the government style loans?
Okay, well, government, when you hear somebody use the term government loan, they're referring to either FHA, USDA, which is agricultural or farm area, or VA, which is the Veterans Association.
Okay, and then the other ones are?
Your conforming loans, your private loans are conforming, or either they're subprime too.
Mm-hmm. Should I try to qualify for a government loan, or does it really matter which way I go?
Every person and every situation is different, so it's just a matter of, how much money you want to put down, how long you want your loan to be, what your credit score looks like, and what your financial picture looks like.
And things are different now. When I got my first house, you wanted to put 20% down. They said, okay, maybe 10% if you wanted to do the PMI, but that's not the case anymore?
No, with FHA, you're allowed to put as low as 3.5% down. With conventional, you're allowed to put as low as 5% down. USDA and VA don't necessarily require down payments.
The advantages of putting just a small amount down, 3.5% down, are?
Well, you can get into a home, so it's more affordable for somebody to get in. And even if you have that lower down payment, maybe you have a pinch higher interest rate or you have that PMI, interest rates are so low right now that it's still affordable, and you're still going to be earning equity, and it's so much better than renting. You've got that tax write-off, you've got the ownership of the home, so all around better, even with the lower down payment and the PMI.
Rick, we were talking about things people should not do once they lock in their mortgage, and you had a big one that happens a lot and you hate seeing it.
Don't buy a car.
Don't buy a car, or?
Don't even have your credit pulled.
Okay.
If you get excited, you're in a contract with a home and you want to go to Home Depot or Lowe's and put money down or
want to get a fridge.
To get a fridge.
Yeah.
Well, now that's going to affect the loan because the underwriters are going to see that you had your credit pulled. They're going to want to know what the new debt is, and that new debt has to be factored into the mortgage. The mortgage calculations where your debt to income is now, and that new payment could price you out of that loan, could price you out of that home. So, yeah, don't have any credit pulls. Nothing.
Go ahead.
It's sad, but we joke and say if you buy a new car, you're going to end up living in it. So, so if you want to have a home, get the home first, get the car later.
And it counts on who you pick to do your mortgage, right?
Well, those things make a big difference because you want to know who you're doing business with. You want to trust them. You want to know that you're going to get good service, a good rate, that you're going to be dealt with fairly and properly. So that's why you want to use the right people. All
right. The website for the new company, Valley Mortgage Solutions, is?
valleyms.com, or you can go right to kellysoldit.com, click on Get Pre-Approved, and we've got a link for you right there.
And Rick, if they want to give you a call, what do they do?
They can either call the phone number right here to the office, and they'll connect them right to me, or they can call my cell phone.
All right, 330-717-2689. Ask for Rick or somebody in mortgages, and they'll take care of it for you. Thanks, you guys.
Thank you. It's good to see you.
Good to see you guys. Another edition of Home Advantage.